Welcome back to Am I Catching a Falling Knife? The podcast where we dig into turbulent stocks to see if there's an opportunity or if we should just steer clear. Today, we're putting a tech giant under the microscope, CRM or Salesforce. This stock has seen some turbulence over the last few days. So, is this just a dip or is there more to the story? Let's dive in. All right, let's get into the heart of the matter with Salesforce. The dominant market narrative right now, despite them actually beating Q2 earnings and revenue estimates, is investor apprehension. Specifically, folks are worried about their softer-than-expected Q3 revenue guidance and the perceived slower monetization of their substantial AI investments. This isn't unique to Salesforce. It reflects a broader skepticism in the software sector about AI's immediate disruptive impact on the top line. But before we get deeper into that, let's quickly remind ourselves what Salesforce actually does. Salesforce Inc. is a titan in customer relationship management, or CRM. Their Customer 360 platform is designed to bring companies and customers closer, offering a suite of services from Sales Cloud for managing leads and forecasting, to Service Cloud for customer support, Marketing Cloud for personalized campaigns, and Commerce Cloud for unifying the customer experience. They also have powerful platform offerings like Slack for engagement, Tableau for analytics, and MuleSoft for integration, essentially helping companies build business apps and unlock data across their enterprise. Geographically, the Americas make up the bulk of their revenue at about 66%, with Europe contributing around 23% and Asia-Pacific at 10%. Now, let's talk about how this narrative might be impacting the numbers. Our analysis suggests that the market is effectively baking in a downward adjustment. We estimate that the softer-than-expected Q3 revenue guidance, coupled with the AI monetization fears, could translate to about 3% lower revenue than previously expected for the quarter. And here's where operating leverage comes in. Because software companies like Salesforce have significant fixed costs, a change in revenue often has a magnified impact on earnings. We're estimating an operating leverage factor of 2x, meaning that a 3% revenue hit could lead to an estimated 6% negative impact on quarterly earnings. Now, a quick side note on the numbers. The reported gross margin for Salesforce is quite low for a software company, at just over 19%, which actually makes some of the internal earnings flow-through calculations a bit tricky, adding a layer of uncertainty to the exact magnitude of earnings sensitivity. That's why we're looking at a confidence interval for this earnings impact, ranging from -4% to -8%. So, what does all this mean for valuation? Salesforce is currently trading around $256.45. When we run our discounted cash flow models, our base case, without specifically adjusting for the recent narrative shifts, gives us a fair value around $142.07. But when we incorporate that 6% earnings hit from the current narrative, the narrative-adjusted DCF value drops further to about $130.70. And if we look at a PEG-based fair value, considering their EPS growth, it comes in even lower at around $120. So you can see there's a pretty significant gap between the current market price and these calculated fair values, even before we account for the recent concerns. For those of you wondering about potential entry points, our custom buy levels for CRM, based on our framework, are 150, 125, and 85. These are the kinds of levels where, if the stock were to reach them, we might start to see more compelling risk-reward based on our valuation models. So, to wrap up our deep dive into Salesforce CRM, it's clear the market is currently grappling with concerns about Q3 guidance and the pace of AI monetization, leading to an estimated 6% hit to quarterly earnings. While Salesforce is a dominant player, our valuation models suggest a significant disconnect between the current price of around $256 and the narrative-adjusted fair value of about $130.70. This highlights a premium the market is currently paying, which might be vulnerable if these concerns persist or deepen. Keep those custom buy levels of 150, 125, and 85 in mind if you're watching this one. As always, this isn't financial advice, it's just our breakdown to help you on your investment journey. You should always do your own thorough research and consult with a financial professional before making any investment decisions. Thanks for tuning in to Am I Catching a Falling Knife? I'm Dave, and I'll catch you next time.